Good afternoon, everyone. Thank you for joining the Global Wheat Market Outlook today. We will go through Mike's presentation, and then we will have some time at the end for Q&A. If anyone has some questions, you're more than welcome to click at the top of your screen. There should be a little question mark for a Q&A icon, and you can submit questions automatically through the Teams live meeting. Good afternoon, Mike. How are you doing, sir?
I'm good, thank you.
Okay. Awesome. So Mike is our risk management consultant here in the Kansas City office. Been here quite some time. How long have you worked here, Mike?
37 years.
37 years. Holy moly. Okay.
Yeah.
So Mike, over to you, sir.
All right, thanks for joining us this afternoon. I've had a request to do this wheat market outlook from a couple different clients, and since we're in the middle of harvest here, we thought we'd just do it online and try it, and maybe start doing this as a monthly event. I put together this data with my team here every month anyway after the USDA WASDE report. And we usually just send it out to clients, but I think it'd be interesting to start doing it as a live event. You can kind of go through and put a little context to what we're just throwing up on charts and graphs. Like we said, data without context is just noise, right? So we'll get started. I work for a publicly traded company, so I need to leave this disclaimer up for at least 30 seconds. So I normally would tell a really bad joke right about now, but I don't think I will. So I think we'll just count this as close enough to 30 seconds and move on. Thank you. So this is interesting. I updated this chart. I did this a small outlook last week that I talked about wheat, corn, and beans. And I already had to change this slide. I like to start with this type of slide for each commodity that I do, mainly because I like to pick out 5 or 6 points to talk about, then build my commentary around that. So the big difference is last week I had the futures fund market structure as a bearish factor, and I've moved that to a neutral just because of the market action this week. So from the low last week to the high this week already, KC wheat's already put a little under $1 on. Chicago wheat's up $1.13 for the low last week to the high today. Minneapolis wheat's up 77 cents, and Matif is up 16 euro a ton. And we all know it's on the rally of the corn, but wheat is following corn, and I think this is starting to force some of these funds to short cover. And we'll get into some of that. The most bearish thing I continue to see is this Russian crop and export potential. You saw the Algeria tender earlier this week where Russian wheat traded at 262 to 265 CNF delivered Algeria. And so that's about 225, 230 a ton FOB, which is well below the 240 a ton minimum that the Russian government was talking about. So the question is, do they move that down? Or do we see prices start to stabilize back up against there? But the thing that Algeria tender showed that the Russians were selling wheat $20 to $25 a ton cheaper than the next closest EU offer. The most bullish thing remains this headline risk, some type of incident in the Black Sea, some type of issue we saw with the dam a couple weeks ago. Is there, some port issues that could pop up? But it's all focused around the Ukrainian-Russian conflict over there. And I still have major exporter carryout to this because major exporter carryout to use as a major risk also. And I'm going to take a little different slant looking at that today. Wheat corn spread, clearly I had this as a neutral factor last week. I think that's moved up a notch simply because as corn moved higher, wheat's going to move higher following it, not only from a structural perspective, but from a feeding perspective. U.S. stocks are neutral. I did tick this down a little bit on the world demand chart. Biggest problem with the wheat market today is there's no demand. There's no export demand. So you've got the Russian with a big crop coming, no homes. You've got EU wheat coming with no homes. We need to see these importers come back into the market. And the biggest thing I see there is just simply the cost of commodities, cost of money, and the inability for people to fund purchases. Now, when we look at one of the charts I looked at on world demand, we'll talk about that a bit, but right now world demand is a neutral to almost a bearish factor. Probably the only thing we've really got to look forward going to is the weather and quality risk we've got. we're probably going to see a small tick down in the European crop, probably start to see some reductions in the Russian crop. We saw Solvecon drop his crop estimate a little bit today. We've got a lot of weather to still get through, and I'm focusing on U.S. and Canadian spring wheat conditions along with Russian spring wheat conditions mainly. So let's talk about the markets just for a little bit, just on market structure. I like to call it fighting the algos. This is a picture of a pit where we had a lot of liquidity. You could make markets in the front, you could make markets in the back. And with everything going to electronic, we've lost the ability to trade stuff in the back. There's just, like I said, the liquidity is shoved into the first 3 months of the market. You guys know that. So how do we trade the back end? Very carefully. You certainly don't put any market orders in out the back of the curve. You have to work orders with limit orders to see where the bid ask is. And I don't see that situation changing much soon. When we talk about money flow fighting the algos, this is a chart that we like to look at. This is the combined futures net short spec position. You can see this was as of last Tuesday. They were short a little over 130,000 contracts. This is combined everything. This is my TEEF, Chicago, Minneapolis, KC, but clearly we've short covered this week. I've got an open interest chart that shows it pretty well, but I think the funds have probably short covered 30 and 40,000 contracts this week, but still going to leave them, close to 100,000 short. So if corn continues to grind higher, do these funds come in and short cover that, or do they view this global bob market as a bearish enough factor to keep them with these short positions? I think we'll see a little more short covering, and we'll see how we'll get the COT report out on Friday and see how that looks. Another chart we like to look at is this is a combined managed money net. This is all the grains, all the oil seed, and all the livestock. We had a large long for this earlier this year, sold off dramatically, as you can see that. They actually got short a little bit of everything, but this is reversed too. Now this is partly, I think, the Fed fund rate change, and we'll talk about that. People were trading inflation. All of a sudden, they were trading deflation. Now we're back to maybe trading a little bit more of inflation with potentially the interest rates starting to work their way lower. I like to talk about, when we look at the fund numbers, I like to look at the speculator versus the commercial. So this is the blue line here is the short in Chicago. But this is the commercial. Actually, the commercial was a net long going into the last couple of weeks. And that's a couple of things. That's people selling physical into the consumer market without the ownership. And we're going to see a pretty good run here in harvest. We're going to see a lot of cash wheat move. That's the one thing with this market rally we're seeing. The farmer has a lot of incentive to sell cash. So it'll be interesting to see these two charts shift as we come into the COT report. But like one saying we like to use in here is funds make trends, but commercials change trends. So we'll see if this commercial length comes out of the market as the farmer sells it to them. KC is kind of a similar situation. We had a fund length. Funds were long a little bit of KC wheat. They're pulling that off. The commercials were short, starting to cover that in. But like I said, we're going to buy a lot of cash wheat in the next 2 weeks, especially if these markets continue to rally. Now, the one thing to think about these two positions here, everything we see today is a spread in these markets, right? Wheat, corn, corn, beans, beans, wheat, beans, KC wheat. So this is just to look at one of the intra-market spreads that has been driving the price direction. So this is KC Chicago. So back at the heart of the Russian invasion of the Ukraine, Kansas City traded at a sharp discount to Chicago because Chicago ran when we had the limit up. So this is a weekly chart, but you can see how this KC Chicago spread went from, a normal kind of 50 to 60 level. All of a sudden, we put in an all-time new high in this spread a couple weeks ago, trading over 275 premium KC over Chicago. Now this has really come out. Now it's nicely. It's back down what I would call almost to a midpoint. Midpoint 772. I think it's still overvalued a little bit, but it just shows you we had the short potential crop in hard wheat. We had the good crop coming in soft wheat, but you also had this whole fund selling Chicago that artificially drove KC probably higher than it should have versus Chicago wheat. And like I said, the intermarket spreads are one thing that will continue to drive both KC and Chicago wheat and Minneapolis to a point, but not, the funds don't trade Minneapolis a lot just because of the liquidity issues. So you think about we talked about those index funds. This is a good chart our research group put together here. It just shows index fund participation. So this chart shows the size of the long the index fund held. Now, those are almost always passive longs. It's your inflation hedge. And this orange line is the Fed funds rate. So as the Fed funds rate started going up, guess what? These indexers started liquidating positions. Now, we always like to say, is causation correlation or correlation causation? No, neither way. But when you see this, it's pretty clear that they were anticipating the inflation coming out of the market with interest rates going up. And we'll see if they come back in the market. This is the open interest chart I want to really show you. So this is updated as of today. So this is Chicago wheat on the left-hand side. This blue line is this year's open interest. We went from, in the 1st of June, to a little over 400,000 contracts of open interest down to about 350 today. So we took 12% off open interest in Chicago this month. This is fund liquidation, I think. We always look for directional view of what the funds are doing within the changes in open interest. And I think this is a pretty good example. But you can see how low open interest got last year. I don't think we're going to go down there this year. We just ran so many people out of the market the last 2 years. KC is another good example. You can see where we started the year with open interest. We just ran so many people out of these markets last year with the volatility, the limit up moves with the Ukraine invasion, the Russian invasion of Ukraine. People just have left the markets. They're just not trading. But you can see KC open interest is back on the curve to kind of follow last year's path. I don't think it'll be as bad, but you got to think about one thing. This is also just a symptom of the shorter crops we've got for the last 2 or 3 years. This La Nina has really hurt hard wheat production, and we'll look at that. This is just, you view market risk by volatility, and we track the volatility of all the futures markets. And this is actually an old chart. I left it in for one reason. So this shows option volatility when the Russian invasion of Ukraine happened. You guys all know what happened. We ran the market up. The liquid implied vol did. We always think that selling vol at 100% is a good idea. Well, it is till it goes to 190. Now, I just left this in here to show how out of whack the markets got 2 years ago and ran people out. This volatility ran people out between margin calls, increased margin risk, and just the overall lack of liquidity in the market just pushed a bunch of people out. Now we're elevated a little bit, but this next chart shows KC. It's a better view. This is current. So this is Kansas City implied volatility. So we got pretty high back in a year ago, and vol has come out pretty good. A little spike up a couple of weeks ago, and we're back to probably spiking back up again today. We'll print this chart as of Friday and take a look at it. Like I said, we measure market risk with implied volatility in the option market. This is a pretty fun one. The research team put this together for me. So the cost of doing business. This just shows Chicago wheat initial margin versus margin as a percent of nominal contract value. So think about it. In 2017, it cost you $1,000 to margin one contract of Chicago wheat. So for $1,000, you controlled 5,000 bushels. When rocking along, all of a sudden we had our Russian invasion of Ukraine. How does the CME regulate risk with trading firms? They do it through margin. So if they see the market becoming elevated on risk, they start raising margin requirements. So we actually saw this margin required get up to $6,000 a contract at the height of the volatility last year. This chart would coincide perfectly with that volatility chart we looked at. Now, the cost of doing business was increased because the value of that margin was almost 12% of the contract value of the commodity, the Chicago wheat. Now this has come down, but it's still almost $3,000 a contract. So it's double, triple what it was 3 or 4 years ago. And it's still running about 10% the value of the contract itself. So it's, the interest rates are causing not only problems just for everyday ag businesses, but you think about what the value of the borrowing you have to do to trade commodities. If you look at it from the cost of money, it's keeping that cost elevated. Real quick, talk about world wheat. You know, this just shows production and ending stocks globally. Kind of a dumb chart, but we got to look at it. So this shows everybody. This is a production for everybody, and this is carryout. Now carryout has been coming down a little bit globally. There's a couple of things we'll look at on that. So you look at the WASDE report, the change in production from year on year. It's interesting when you think about, when you look at the decreases this year. So Australia's going to have a much smaller crop. They had a record crop last year, so we're going into El Nino there. Russia's down, but we need to talk about that in a different context. We will. Ukraine's down, we know that. Kazakh's down. So these are all exporters, right? North Africa importer, Brazil importer, US up fraction, China's up a little, Canada's up, EU, Argentina, and India. And we'll talk about India some more. So net, we had an increase of 16 million metric tons net. So let's talk about major wheat exporter carryout yields. When we talk about global stocks, we don't talk about world wheat stocks because 50% of those stocks are held in India and China. So we don't even view those as available to the market. So a better measure of the market's what's available, which is the major exporters. So you can see right now, this is Argentina, Australia, Canada, US, EU, Ukraine, Kazakh, and Russia. And we're sitting about 14.5% carryout to use. We're down year over year. Total carryouts down year over year. This is mainly Ukraine. But we're nowhere where we were in 2007. So we talk about the US being priced out of the export market. So let's take a look at this chart throwing out the US. Same exact chart, but we're just talking about Argentina, Australia, and the rest of the exporters. Carryout use is actually decline about 2% when you take the US out. So the US is still important overall from a global perspective. But these countries are going to do the business first. We're going to export some soft wheat. We're going to export some white wheat. So between hard wheat and spring wheat, you know, we've had to ration off our exports through futures price. Market's done its job. So it's interesting to think about in 2019, these exporters were actually record low on carryout to use. It's been built back up through the increased production in Russia. So if you see any production issues going forward with any of these countries, this equation changes, and all of a sudden you have to start thinking about where does the U.S. fit into this equation. Another good chart to look at, this shows stocks to use comparison kind of by region. So this gray line is the U.S. and Canada, and you go back to how you can see how clearly these stocks have been dropping. This is U.S. main. But the Canadians had a short crop 3 years ago, pulled stocks down pretty tight. We've been pulling this down. The light blue line is Eurasia. This is Europe and all the Russia, Kazakh, all those countries, clearly down a little bit, but nothing out of the ordinary. Now, Argentina and Australia also down. This could get pretty interesting this year if we see the weather conditions continue that we're seeing over there. But my point here is the buffer in the market was always U.S., Canada, and that is gone. Another way I like to look at it, we look at Russia versus U.S. carryout. So the mantra of going and doing a farmer meeting or a producer meeting for the past 5 years has been U.S. is the residual supplier to the world on wheat because we have the biggest carryout. That's not accessible. It's not cheap. So this is what Russian carryout has done over the years. The Russian carryout is up, U.S. is down. So when you think about a global situation, who would you rather have as a supplier of last resort, the U.S. or the Russians? I think some people are going to have to answer some interesting questions on that in the next couple of years. Look at major wheat importers real quick. The blue bar is production. The orange bar is imports. So we saw the imports run up in the mid 2015 to 2017, then kind of back off. They make a nice another run up. And part of that is simply production issues in those countries. So when you think about all these importers, they've had production issues, they've had to import more wheat. Now we're seeing a little bit of a pickup in this production this year, but there's a couple countries in here that, you know, we'll have to see how they function with this interest rate environment, cost of commodities, how much they can import. And this is going to be important going forward, especially October into the winter. This is the one chart I like to look at, and this is kind of an interesting one that makes me think about how we view world demand. So this is simply world wheat domestic use change year over year. So you can see this year the USDA's got world demand up 2 to 4 million tons. Last year we were down. Now the year before that, and especially 2020, that was a COVID year, right? So what were people doing during COVID? They weren't buying just-in-time inventory. They were buying just-in-case inventory. We went from just-in-case to just-in-time. So the world was destocking from the stocks they built up through COVID. So are we going to see another destocking year or a restocking year? It's very rare to see back-to-back years of 2 years in a row of destocking. Fact is, you simply don't see it. Now, you may not see a big increase, but look at the years following that, though. You almost always get a big jump in domestic demand to build up those stocks that had been used up through the years when people couldn't buy much. So when you think about world demand, is this the kind of the key going forward? Will we have to see these importers come in and start buying wheat? But can they? You know, the Egyptians are struggling with financing. We see all the North African countries struggling with financing. Now, crude prices have moved up. That helps a lot of those importing countries. But financing, interest rates, and simply the cost of raw commodities is impacting this quite a bit too. All I like to just throw this chart in here. This shows global wheat use minus feed. So you look every year we use between 75 to 85 and 90% in food. And we simply use 10 to 20%, 30% in feed. But wheat is a big feed ingredient. When you look at the EU, we've actually got our projection. These are USDA projections, higher for feed use, China up a little bit, Russia flat. And but I think we're going to see quite a bit of feeding done around the world. And guess what? If corn prices continue to accelerate, even with a big Brazil crop, you simply add another layer of complexity to these wheat corn markets when it comes to feed rations. Now, this has been the big story all year. This is a chart that my colleague Matt Ammerman puts together, does our Black Sea wheat work. It's a good chart. So the blue line shows Russian FOB 1250 values. And this does not reflect, I don't think it reflects the 225 to 230, maybe it does, of the recent Algerian tender. But this orange line is US hard wheat. Green line is US soft wheat. So we're clearly priced below this. But like I said, if you throw an EU chart up here, it's running about the same as soft wheat. Soft wheat's been competitive versus EU wheat. It's just a function of freight spreads where that can go. But clearly hard wheat's priced itself out of the export market, but it should. You know, we've got 3 short year crops in a row of hard wheat. We're pulling carryout down. The futures market did the job of taking US wheat out of the export picture. And we'll see how we evolve in through the 2024 crop. But right now, US hard wheat is simply going to inelastic buyers and a domestic price. Soft wheat, everybody loves crackers, right? You got to have soft wheat around the world to make crackers. So we'll continue to see pretty good demand for soft wheat. Talk about Russia real quick. I'm just going to do it through a couple of countries real quick. Now, my point here is, this is Russian wheat production, the blue line. This is the USDA number. Now, this is last year. The USDA's got them at 92 million. Everybody else, excuse me, has them up here, 102, 104 million metric ton. So if we're going to pull carryout down this year, is carryout actually 8 to 10 million tons higher? So the Russians could have probably afford to have a smaller wheat crop, a little bit of a production issue, if that number is correct. I think the prices going forward, we get into October through January. Let's see where these Russian prices are at. We'll probably have a better feel if that crop was that big or if it wasn't that big. The USDA is pretty adamant. They don't believe it was. Now, how much of that was the grain they stole out of the Ukraine? That's another question for another time. Ukraine, we know we're going to see smaller crops. One of the people I follow has got the crop at 18.5 million metric tons. That's down 12% from a year ago. It's the same story. The fighting, you can see the wheat growing regions on this map. It's where a lot of the conflict is. The farmers are struggling with feed fertilizer financing in general. And like I said, for reference, you think about it, they're going to do 18.5 million this year. In 2021, they raised a 33 million ton crop before the conflict started. A lot of talk about the Russian grain corridor going away. I think it's gone. I don't think the Russians are going to get back into it. So what's that mean? This is another good chart by Matt. It shows the red shows when we started the waterborne export corridor, how much grain was being moved out via water. Now the green line is Danube ports, the blue is rail, and the rest is just trucks. So clearly it's a big piece of the export. But even this year, the majority of these exports were corn. Wheat was a part of it. So the corn market actually has probably got more exposure to this than the wheat market, in my opinion. EU is going to have a big crop. We've got some weather issues developing. Northern Europe's got some issues in the Scandinavian countries and the Baltics. Probably start to see a little bit of smaller crop production in that region. Probably the biggest issue I see is too much rain. Parts of southern France, Italy, you get into the Balkans, Romania, Hungary. We definitely got to watch those areas for too much rain from a quality perspective. Southern Russia's got the same problem. Too much rain could damage quality. And when Sobicon lowered their Russian crop today, he cited spring wheat conditions. They've had a pretty tough start to the spring wheat over there from a moisture perspective. And a third of Russian wheat production is spring wheat. So the important thing to follow going forward. Canada, they had a real short crop 2 years ago, good recovery a year ago. Projections are pretty big this year. Crop's looking pretty good right now. We got to watch it though, from a heat and a moisture perspective. This heat that's been hitting the northern plains has been hitting the prairies, but they've been getting a little more moisture. Really need to focus on the July moisture for these Canadian spring wheat and durum crops going forward. Australia, record crop a year ago. Down sharply this year with a potential for an El Nino there. We'll just have to watch this. And Argentina, we've already got a problem bringing Argentina. Short crop last year because of the drought. Acres are up, but they're still in the heart of that drought. So this number is going to keep coming down from a production perspective. So spring wheat's one thing I'm focused on this year. This shows total spring wheat production by country. This is the U.S., blue line down here, Russia, Kazakhstan, and Canada. Now we focus on spring wheat because it is what drives the milling market from a point. When I talk about wheat, I talk about two kinds of wheat. Bulk wheat, which is soft wheat in the U.S., and matif, which is most European wheat. There is some high quality wheat up in the Scandinavia and the Baltics, but for the majority, it's all soft wheat. And when you think about how important spring wheat is from a milling perspective, this is a good way to look at it. So this blue bar shows world production less China. The light blue line is total spring wheat production for those countries we mentioned. And you can see it runs between 8 to 10% of world production. So if you do run into a problem anywhere in the world with whether it's U.S. hard wheat, whether it's Russian spring wheat, Canadian spring wheat, the milling market depends on these spring wheats to up the blends for the lower protein wheats that they can use. Talk about U.S. wheat real quick. Yeah, this is the story for the U.S. It's not going to change. It's planted acres. U.S. farmers are planting less wheat. We know why, because they can make more money with corn and bean. This trend is not going to change. The question is, do we see blips where we see better production? That's what is hurting us right now with this hard wheat. We just had 2 short crops in a row that's definitely changed the balance sheet issue with hard wheat in the U.S. Look at winter wheat acres from last year. For this year, we saw a big bump in hard wheat hard red winter wheat acres, almost 3 million acres, but 75% of that was in Texas and Oklahoma. So we're harvesting right now, and I'll talk about that in a bit. Soft wheat acres were up again too. 20% of that, or 37% of that was in the states that are tributary to the delivery markets, and white wheat acres were unchanged. Now, crop conditions are what's driving this thing. So this was the crop report from yesterday, condition report. These are the hard wheat states. You can see they're just well under their averages. So between Texas, Oklahoma, Kansas, really short crops. We're going to have record low crop in Kansas, record low crop in Oklahoma, and we'll find out what kind of crop we've got in Colorado. But the one I'm watching is Montana specifically. You know, this crop was 58% good to Exxon 3 weeks ago. Now we're down to 36%, well below average. I was counting on Montana production to rebound to supply the P&W with export wheat for the hard wheat market. Now we got to think about that. Soft wheat's all pretty good. We've had a decline over the last couple of weeks with some of these areas, but our guys in Kentucky, Illinois, Indiana are reporting pretty good yields to start out with, so I don't think it's going to be a problem. I did lower my soft wheat crop just a little bit, a little smaller yield, and we'll see how that comes out. We do have a little problem out of the P&W too. The white wheat crop, specifically in Oregon's running low, below average on ratings, but we'll probably see a yield drag come out of here in time, and that'll change the impact of the white wheat market if we have a short wheat crop in Australia. So we're going to make a new record on this. This is percent of harvested winter wheat acres that are banded. This will be a new record. You know, we may be above 30% total. There's areas in Kansas, Oklahoma, and Texas. You know, if they harvest 40 to 50% of the crop, we'll be lucky. So that's just another thing driving. So where we're harvesting in Oklahoma right now, we're seeing some pretty good yields. Enid areas 30 to 40, 50. Down in southwest Oklahoma, we saw some, 60, 80 bushel yields. Problem is, it's going to be this. How many harvested acres are we going to abandon for the crop altogether? Spring wheat acres down year over year. I do believe all these acres got planted, though. I don't think there's anything that did not get planted, but it's going to come down to yield. So this is the spring wheat crop condition report from yesterday. Dropped 9 points from last week, well below the average. And you can see North Dakota, South Dakota, and Montana are hurting. Now, they've got a good chance for rains in these regions, but talking to my clients and customers I have out there, the crop's maturing way too quick. You've got spring wheat that's 8 to 10 inches tall that's heading out. It's 2 to 3 weeks early from a maturity perspective. So if they don't get these rains coming in next week, we're going to see the crop decline. And if the rains do come in, it may simply just stabilize the crop. But like I said, I do have one little bullish thing in my hip pocket right now, and it continues to be spring wheat overall. Stocks, this will be interesting when we get the July stocks report to look at it. You can see the dramatic drop in these hard wheat stocks. Soft wheat stocks were flat to a little lower. Majority of the increase in stocks last year was up in the North Country. Increase in North Dakota, Washington, Oregon, Montana. These states saw the increase in acres. So this July stocks report should reflect smaller stocks in these states. The U.S. wheat market is really easy to talk about. This is how much we use, this blue line. The green line is how much we've been growing. So for the last 1, 2, 3, 4, 5, 6, 7 years, we've been using more than we've been growing. That's what's changed the U.S. wheat market from not even a price perspective, but from a balance sheet perspective. Usage in wheat, this blue line is food. It's pretty steady, but you can see exports have declined. When we have excess supplies in this country, we export it. And when we've been running into the problems we have to shut off exports. And you do that through price, and we've been doing that. Feeding as flat. It's going to be a little interesting on soft wheat this year. But this is a good chart. It simply shows the percent of U.S. export as global share. One time back in the middle 90s, we were over 30% of the exports. Now we're down less than 10. I think everybody understands that that's a price perspective. Increase in production in Russia, big crops in the EU, and just a different production view and production numbers. Cost of production is what I'm trying to say. Different cost of production in Russia, Ukraine and Kazakhstan. They can continue to grow wheat, sell it at a cheaper price. I'll talk about wheat feeding a little bit. This simply shows corn wheat spread in Chicago. You know, we got back to even money. We started to see a bunch of wheat start. This is a weekly chart. We started seeing a bunch of wheat getting fed kind of May, late April, early May into now. Hearing some reports down in the Southeast right now, massive soft wheat feeding down in the Carolinas, down to the coastal areas of the Southeast because of the new crop soft wheat supply versus the high price of corn basis and the rally in corn flat price. So U.S. wheat carryout, yeah, we've been pulling it down, but it's still 25, 30% on its own. This isn't that bullish, but we've got this outside factor called corn and soybeans that are driving wheat prices today. Talk about wheat by class real quick. This is hard wheat regions, spring and durum, white wheat over here, soft wheat over here. That's why I always say, ladies and gentlemen, trade wheat. Everybody else just trades pig food, because a wheat guy's got to be really smart to trade all these classes and spread it and hedge it against 4 different futures exchanges. The poor corn guy, he's trading number 2 yellow corn day in, day out. So look at carryout by class. Hard wheat carryout to use has been coming down dramatically. This is spring wheat. This is soft wheat. So we've seen all these come down, and that's a production issue. Hard wheat demand, talk about hard wheat real quick. Food use is actually probably going to be down this year because we're going to see substitutions from spring wheat and soft wheat in the grinds. But look at exports. You can just correlate these lower exports every year to smaller production. Until we start to see a rebound in production, we're going to continue to see soft wheat exports out of the U.S. on hard wheat. Question is, do our buyers of our wheat that like it continue to buy it? Our inelastic demand. Mexico, Asian countries, will they continue to use U.S. wheat? We know Mexico will import French wheat. We know they'll import Russian wheat if they can. Asian countries, they tend to like U.S. wheat. They have trade surpluses. They don't mind paying the price, but they'll still buy as much Canadian and as much Australian as they can too. So you look at hard wheat carryout. These are my estimates. I've increased my hard wheat crop to 560 million bushels over the last couple of weeks because of the increase in index ratings. But I've got carryout dropping just a little bit year over year. But my carryout to use is up because we're rationing off exports, and we're going to see less food use because of substitution from soft and spring wheat. So this is a good chart to show on a day the market's been up. So like I said, this is a week ago from Friday. Kansas City wheat futures for the last 5 years were kind of in our upper third. Well, we're close back to 880 now, 880 right here. So nice bounce in this market. We're still in the upper third. One thing I will say, if there's any producers listening, July of 24 wheat is back to trading around 830 to 840. That thing gets up around 850 to 8, all the way up to 859 bucks. Probably need to be thinking about selling some new crop wheat, because I do think we'll see a pretty good increase in hard red winter wheat acres last year because of the moisture we've seen the last 6 weeks in the areas that have been really dry. I'll talk about basis real quick for the milling crowd. This is simply KC basis, the high side that is put out every day. This is the 12 Pro. So we were down to 130 over last week. We saw a big bump in basis yesterday. We saw a couple mills chasing some spot cards, some 12s, and ran the basis up to 160. I think we stay pretty flat on basis all year. If the market stays inverted like it is, that's not bullish basis. I think we'll put a little carry in the SEPD, so that might push a little bit of a demand into the basis going forward. But March forward, you just have to think about being short basis if this market's going to stay inverted. But a lot of time to see how that plays out. But you can see this red line is the last 3-year average basis. It'll be real seasonal. We should put our highs in kind of December on the basis, then fade off from there. I want to talk about deliverable stocks real quick. So we're starting out this year record low on deliverable stocks in Kansas City because of the short crops the last 2 years. I don't think we get much over 40 million bushels this year in deliverable stocks, maybe a little more than that. But where are we going to wind up at? Are we going to wind up with 10, 15 million bushels of deliverable stocks at the end of the season, you can see how this year went. Now, when you think about, this is the delivery markets, different delivery markets, it's soft wheat, spring wheat, this is KC. So you think about Wichita and Hutch. These are our, and Salina, our major delivery houses. Think about how many shuttle loaders and new facilities have been built in this arc here to shortstop bushels from going into KC or going into the delivery markets themselves. And it's interesting, if you look at the bids into Hutch and Salina today, you've got one major still bidding option price of July for wheat. So if you think about, there's a 9-cent spread from KC to Hutch from a deliverable perspective. The bids are over delivery already. So we'll see as we go into harvest if basis doesn't back off. Now it's interesting, we heard today that the bids into Fort Worth now on hard wheat are 60 to 80 under. Southwest Oklahoma, the farmer bids are $1.10 under. In the Enid area, we hear that we see that bids are 40 under. So the cash bids out here are 40, 50 under in this area right here. If the market's option price here, these bids need to be 50 to 60 under, right? Just a truck freight spread. There is no Gulf market today. I heard maybe today paper would trade at the Gulf at 60 over. So we have no Gulf market to trade against. So basis values clearly need to back off a little bit. And that goes into the next slide. We'll talk about calendar spreads. So this is a seasonal chart on the SEPDs. With what I see going on with basis, the flat price move that's encouraging producer selling, I think we'll see the SEPDs work to a bigger carry. You know, we traded even money today on the spread. This is last year. The blue line is last year's what the spread did. You can see the last couple of years. I think we'll trade this thing. I don't know if we'll get to maybe 4 to 8 under when it's all said and done. I'm going to be real patient with this spread as we see how the basis evolves. But I do think if you get a number out there that you can get out to the Dece or the March, if you need to roll any hedges forward, think about it. I think the basis is going to have to give us some carry too. That's why I think when you look at these basis values backing up like we have the last couple of weeks, do we get the basis cheap enough to give us some cash carry also? But I'm a little bearish this spread going forward. Next slide, simply forward curve and futures. This is July 24, July 25, or July 23 over here, July 24, July 25. Market's inverted. What do I always tell you about an inverted market? Sell it to me now or I'll punish you then. That's from a producer perspective and it's from a hedger perspective. So we need to pay attention to these markets pretty close this year, get our bids wider and make some margins. Spring wheat real quick, harvested or planted harvested acres have been coming down, same situation. And with the potential for this global or this increase in biodiesel production, like I said, we're already seeing 2 new plants going to North Dakota for biodiesel. And I saw some new crop soybean bids up at one of the new facilities that ADM's putting in. Pretty remarkable. I think they were bidding 35 to 40 under for new crop beans in North Dakota. That's just going to take more and more spring wheat acres away as more oil seeds go in. You know, North Dakota is going to go from 0 soybean crush to 80 million bushels of soybean crush in a couple of years. And plants like that will get built. I think we'll see some of these biodiesel plants not get built, but the ones that are on the books that are major players tied with petroleum companies, they're going to get built. So North Dakota is going to continue to lose acres to oil seeds. So spring wheat, I've got food use up a little bit because going into the hard wheat grinds because of the short hard wheat crop. Exports are down. Feed residual, who knows? Should be 0. We'll see. But I like how the USDA can play their magic with feed residual. You know, we saw in 2021 a -25 feed residual in spring wheat. That's how they correct errors in production, is through adjusting feed residual. Spring wheat carryout, like I said, I've got a fairly bullish spring wheat balance sheet. We're going to drop carryout the way I look at it. If I'm dropping production, I'm also lowering demand a little bit, but it's simply you carry in less, you produce less, you carry out less. And that can make these balance sheets pretty tight. spring wheat, like I said, we're trading, what did we close out today? Around 880. So we're up around here on this chart. Spring wheat's still a value, in my view. I think that you're below the top 30%, you're well above the average. But from a price perspective, potential, it's still, I think it's still a fair value for what we see today. Basis, I haven't updated this from my last presentation. The blue line just shows 14% pro spring wheat basis over Chicago. Last year we traded up pretty good. The historical average should be a little lower. I would expect to trade real similar to this year just because of the shorter crop. Last year we also had a situation where previous year had a real short crop. The spring wheat farmer hit a home run 2 years ago because he sold all of his old crop wheat out in the rally last year, and they filled their storage back up this year. So we've seen basis standard pressure from tax coming out. This could be the year where we have to see those guys hold a little more stocks and get a little more friendly on basis. This is the forward curve in Minneapolis futures. We got carry up front a little bit. And this is the KC Minneapolis spread. We watch this just from a protein perspective. You can see KC Minneapolis, excuse me, this is Minneapolis KC, sorry, Minneapolis KC. So we got Minneapolis traded at a big discount to KC earlier in the year. We're back to trading around even money. If we see a true spring wheat problem, this thing needs to run up a little bit. Historically, we're kind of fairly priced today, what we see on the average of the Bollinger. But the top end of this thing would say we probably need to go to the 25 to 50. And the next 2 weeks weather is going to determine a lot of what this spread does if they don't get those rains up in North Dakota and South Dakota. Soft wheat real quick. It's pretty easy to trade soft wheat, right? We're going to use 150 to 160 million bushels every year for food. And I'm picking this up this year. I think we're going to use more soft wheat in our hard wheat blends. We heard people are using 40 to 50% soft wheat in their hard wheat blends, mixing with a little bit more spring wheat. So I've got that up. But this orange line is exports. Clearly, when we have excess soft wheat, we export it. And when we don't, we don't. Exports are probably up a little bit this year. This is feeding. I think feeding's going to be a little bigger than we think. I think the one thing we'll come into the end of the year on soft wheat and say, man, we sure underestimated soft wheat demand this year. My soft wheat carryout balance sheet's pretty flat. I think we're going to have about 90 million carryout. I don't see much change going forward. Probably the outlier would be what the Ontario crop is. Earlier, we were looking for a 3 million ton crop in Ontario. If that's closer to 2.5 with some of the weather they've seen up there, maybe we don't see as much Canadian wheat moving to the delivery markets down south, and it just gets exported out of St. Lawrence. Soft wheat's a value. We're higher than we were. We got close to, we closed above $7 today, 7.35. But soft wheat's been a value. It's been trading below the last 5 years average. When you're looking at it from just a pure cost perspective. So where's this thing going to go? I don't know. I think all these markets have a little more upside. Like I said, we basically put $1 on the market from last week on all the markets. Do they need to go much higher? No. Are they going to go much higher if corn goes higher? Yes, but they'll lag. And if corn ever turns and heads lower, wheat will lead the market lower. We lag on the way up following corn. We will lead the market going down if corn does ever break and go lower. Corn wheat spread in Chicago. This just goes to my feeding comment. Like I said, we got down to close to even money and saw some pretty good feed numbers get put on. A lot of feeding going on. Soft wheat basis, I like to watch either St. Louis from a river perspective. That kind of gives you a good stiff number to look at. This is Fostory. This is Manel Milling at Fostory. I like theirs just because they print a bid every day, and it's easy data to mine. But you can see they actually started raising their bid a couple weeks ago. They're 15 over. I haven't checked today, but I think they're looking at a little smaller crop up there, and the farmers selling. They know they need to capture as much soft wheat at harvest as they can. Now at this flat price rally, we'll see if they back this basis up. But you can see kind of what we did last year, which is the orange line. Basis stayed actually pretty flat. And what do you think about a miller who has to fight carries? soft wheat's got a nice carry in it this year. We had nice carries in it last year. So they have to eventually push the basis to get the commercials to sell it out of storage versus capturing the carry in the market. When you think about the forward curve and delivery stocks in Chicago, same thing, shows the carry in Chicago wheat. Got plenty of carry right now. Delivery stocks are pretty good. We're going to start about where we were last year. Will we get as high as we did last year? I think that a lot of that's going to depend on how this crop blows, whether the farmer sells it. And we've still got a lot of off-grade delivery stocks in the Toledo market that may have to try to find a home eventually. Going to keep pressure on the spreads. I don't think we'll go into VSR this year. Early in the year, I thought we might get a tranche on in the SEP-East, but this is my Chicago wheat calcs. On the July SEP, the full carries 29 cents on July SEP, it's close to 20. SEP-East, it's close to 30. I don't think we get close to there. So I don't think 80% would be 24. So you have to get to 24 and stay there for an extended amount of time to get VSR. This just shows a seasonal chart. This is what it did last year. This is where we're at today. We've traded out to 20 carry on the SEP-East. We may get back out there, and I'd be bull spreading it there. I think that you want to be more thinking about 18 to 20 on carrying the SEP-East in Chicago than anything. Talk about white wheat briefly. Left chart shows the supply side, total supply, but the orange line's production. You can see how variable production is on white wheat. It's about how the white wheat, the soft white wheat, the P&W, how the production there is. This year they've got a problem, so we'll probably see that down. But we're well above where we're at in 2021. That was a very short crop year. Food use, we use 80 million bushels whether we like it or not. Everybody loves a Triscuit. That's what that is. Exports, I'm probably too high on exports. We'll probably need to knock this down a little bit. And we will see some feeding, but does the USDA reflect it? Usually not. White wheat, you can see the heat we saw in the P&W. My white wheat balance sheet's fairly neutral, maybe a little friendly, but it's more about flat price. What we see on the flat price going into the year, because white wheat's a flat price animal. It's flat. There's very little basis traded on it. It depends what the Asian millers want and how much Australia has to sell. Durum, friends don't let friends trade durum, right? So I don't talk about it much. Food use, exports up here, pretty stagnant. It's all just about production. Whenever we grow a lot of durum wheat, we export more because we have a static use for a food use. Talk about weather real quick. Two things I'm watching. We're watching this Canadian situation. This is a little dated on this drought map, but it's the current one they've got. They're pretty dry in some of these areas. They've had some rains. They've got some heat coming in. So like I said, the prairies are not made yet. The July market will make that. And this is the U.S. This is the Vegetation Health Index map. The chart on the left is current. The chart on the right was last year. You can clearly see we've got a problem here in eastern North Dakota, up the Red River Valley into South Dakota, versus a year ago. So this heat's done a number on the spring wheat up there and the durum wheat, and they need those rains next week to come in and help that crop out. You can really see the corn market, or the corn issues in the corn market. Illinois, Indiana, eastern Iowa, a lot different than a year ago. So to summarize real quick, I think Russian wheat's going to continue to pressure the front end of the cash in the futures markets. That's what we're going to watch. Any change in Russian export policy can have a huge impact on the market. Do they put a higher minimum price in? I mean, they're underselling the market by 20, 30 bucks. Maybe they don't like to make money. Maybe they don't like to trade like everybody else. Clearly, they've got a farmer that can grow wheat cheaper than we can. They just want their export elevations and move on. But eventually, the government's going to have to see they're underselling the market. Maybe. We'll see. U.S. wheat, we've got inelastic export demand, but how much? I've got my exports numbers down to like 180 million bushels this year. Is that low enough? I don't know. That's Mexico. That's all the Asian countries. They like hard wheat. They like to use it. That'll be interesting to see where we're at in about 3 or 4 months. Domestic demand static. You know, we're pricing out hard wheat, replacing with soft wheat and spring wheat in the mill grinds. So we're going to see some soft wheat feeding. Long term, we're going to see less acres. Now, we've been talking about this milling wheat import thing for a while, and we got it this year. So we're seeing Polish wheat, German wheat move into the U.S., into Tampa, into Albany, and into Houston. But I don't think the American baker's real happy about it. I don't have a whole lot of comments more to make on that. I think that this was taking the genie out of the bottle, so to speak. When I'm going to talk about GMO, I'm going to say the same thing. But we clearly can import wheat into this country. Will the consumers like it? Will the end users like it? That's the question. Northern Hemisphere, we're in the growing season, little room for any global production declines. But I'm focused on quality as a big factor versus the size of the crops going around. You can get plenty of wheat, but this may not be the kind of wheat you want. And it may not be at the place you want it. Global demand's flat. Like I said, high cost of commodities and interest rates keeping the end user out the market. Really got to watch this close. Sometime these importers are going to have to come down and start restocking. And prices are at levels they probably should start. My outliers, U.S., Canadian, Russian spring wheat production. We've been talking about that. Need to keep an eye on that. You know, the China weather thing was a big story 2 weeks ago. We haven't heard anything much about it for the last couple of weeks. Are they going to have to import more? The USDA's got about 12 million metric tons. We'll see. Indian wheat production is going to get interesting. So today we saw a report from one of the private Indian trade agencies. They were putting the wheat crop at 101 to 103 million metric tons. The government's at 112. The USDA is at 113. If that's true, you know, we're going to have to see some imports later in the year. You know, you start talking about 2 to 4 million metric tons of wheat imports into India, all of a sudden that does impact the global balance sheet a little bit. And we do know that Indian importers have been checking on Russian wheat prices for the last couple of weeks, so there may be something to this. We track some Indian wheat prices from a cash perspective, but we'll follow those charts and see if that thing continues to move higher. It's been moving up the last couple of weeks. If those prices keep moving up, that probably means they're going to have to import something. My last point is GMO wheat. You know, the genie's out of the bottle. We have seen GMO wheat being grown in Argentina and in Brazil. So that comes down to, will people accept it? So you think about the U.S. consumer, you think about Mexico. Mexico is anti-GMO, right? They're basically saying they want all GMOs out of white corn for consumptive demand or for human consumption. So are we going to see a situation where certain countries will take GMO wheat, certain countries won't? You know, the question, does the guy in Egypt that's eating flatbread, does he care if his wheat's GMO? Probably not. But if the government in Mexico says your tortillas can't be made out of GMO wheat, that's a different story. That's a consumer-driven end game, and I don't have the answer for that. But like I said, Asian countries do not like it. Remember a couple of years ago when we had just some wild GMO wheat in the Washington area, some volunteer, and the Japanese basically shut off all shipments until we could prove that there was no GMO wheat in that crop out there. So anyway, that's all I got. Like I said, just a quick thing. Wheat market's going to continue to drive, the corn market's going to continue to drive wheat for the short term. And like I said, we've rallied the markets a buck. Let's see if we need to extend this rally much more. And like I said, long term, corn prices will probably determine where wheat prices need to go. And I'm done.
Awesome. Thank you so much, Mike. Really appreciate it. At this time, we don't have any questions. So thank you so much for your participation, folks. And I hope you guys have a good afternoon. Thank you, Mike.
Thank you.